Yes, people, good morning, good afternoon, good evening to all South India students. How are you? Hope so you are good. I am also good. So guys, today we are going to revise three interesting topic. One is the business trust, second is the investment fund, and third is the securitization trust. Now this all three topic we will cover the revision within the 30 minutes, but guys, this three topic is going to cover approx 6 to 8 marks in your examination. And if you see, you know that every time there is a question either from business trust or investment fund. So let's start with the business trust. So question is that what is the meaning of the business trust? So guys, as per the SEBI guidelines in India, there can be a two type of the business trust. One is known as the REIT, that is called Real Estate Investment Trust, and one is the InvIT, that is Infrastructure Investment Trust. Now example of the REIT is your Embassy Office Park. There is a Bangalore based business trust, that is REIT, Real Estate Investment Trust, Embassy Office Park. There is a one more is called your Mindspace Business Park. So Mindspace Business Park REIT, that is also a real estate investment trust. So what exactly REIT is doing? Real estate investment trust, they invest in the real estate asset, and from that real estate asset they are getting the rental income and all, and that rental income they distribute to their investor, or I can say that unit holder. Now guys, second type of the business trust is known as the InvIT. InvIT means Infrastructure Investment Trust. They always invest in the infrastructure. Infrastructure is like a power is an infrastructure, or any road and toll road and all, that is called infrastructure. Example is your India Grid Trust, that is called your Infrastructure Investment Trust. Now guys, here we are going to discuss what is the taxability of business trust, what is the taxability of unit holder. So guys, try to understand here, whole topic is going to cover by way of this chart. So just you have to remember this chart, just you have to understand this chart, and if you remember or understand this chart, then guys, obviously you can secure the 6 to 8 marks from this topic. So let's start with business trust. So guys, here unit holder is going to invest in the business trust. So suppose if you wish to invest in the business trust, then you will be treated as the unit holder. Like suppose today you purchase any like unit of the unit of this Embassy Office Park, and Embassy Office Park REIT is listed in the recognized stock exchange. So if you invest in the REIT, then you will be treated as the unit holder of the business trust. So unit holder will invest in the business trust, and business trust will invest in the SPV. Now question is that what is the meaning of the SPV? SPV means special purpose vehicle, and SPV is always an Indian company. Mandatorily it should be an Indian company, and this company should engage in the real estate business. So here guys, unit holder will invest in the business trust, and business trust will invest in the SPV, that is a special purpose vehicle. And a special purpose vehicle here, SPV, is an Indian company engaged in the real estate business. Now remember, as per the SEBI guidelines, this Indian company will be treated as SPV only when business trust is holding a controlling interest in the SPV. Now here, as per the current SEBI guidelines, that controlling interest is a more than 50%. So if business trust is holding more than 50% voting power or equity share capital of this particular Indian company, then this Indian company will be treated as the SPV. Now try to understand, all people pay attention. Here we will discuss about one by one income. So try to understand, unit holder will invest in the business trust, and business trust will invest in the SPV. Now suppose business trust invest in the SPV, and SPV has distributed dividend to the business trust. Suppose here SPV distributed dividend to the business trust, then what will be the taxability of dividend in hands of the business trust? So here a lawmaker says that this dividend is going to be totally exempt in hands of the business trust under section 1023 FC. So dividend is exempt in hands of the business trust, but question is that, sir, that same dividend is distributed to unit holder, then what will be the taxability in hands of the unit holder? So here a lawmaker says that unit holder taxability on dividend is depends on the SPV, and is that SPV paid tax as per section 115BAA, that concessional rate of 22%, or SPV paid tax as per the normal tax provision of 25 or 30%. Suppose guys, this SPV is paying tax as per section 115BAA, concessional tax rate of 22%. In this particular case, this dividend received by unit holder from business trust and which was received from the SPV, then that dividend is going to be taxable in hands of the unit holder. But sir, what is the tax rate in hands of the unit holder? So in hands of the unit holder, if unit holder is a non-resident foreign company, then that dividend is taxable at the rate 10%, and that unit holder is any resident person, then that dividend is going to be taxable as per the normal tax rate, or I can say that slab rate and all. So again, I am repeating, guys, that if dividend is distributed by SPV to the business trust in hands of business trust, that is totally exempted under section 1023 FC, and same dividend will be taxable in hands of the unit holder, and in hands of the unit holder, if there is a non-resident foreign company unit holder, then 10% is the tax rate, and other unit holder, then there is a normal tax rate. As per the normal tax rate, it is going to be taxable in hands of the unit holder. But sir, suppose if this SPV is paying tax as per the normal tax rate, means SPV is not following that 115BAA, that alternate taxation regime, then what will happen? So suppose if SPV is paying tax as per the normal tax rate, means 25% or 30%, then guys, this dividend is exempt in hands of the unit holder, in hands of the business trust, as well as this dividend is exempt in hands of the unit holder. So if this SPV is paying tax as per the normal tax rate, then dividend is exempt in hands of the business trust, as well as dividend is totally exempt in hands of the unit holder. But suppose SPV pay tax as per the concessional tax rate under section 115 BA. In that particular case, this dividend is exempt in hands of the business trust, but this dividend is going to be taxable in hands of the unit holder, and in hands of the unit holder, the tax rate is, in case of non-resident foreign company, the tax rate is 10%. In case of the resident unit holder, tax rate is a normal tax rate. Now sir, if the dividend is taxable in hands of the unit holder, then business trust supposed to deduct the TDS also? Answer is yes. And here TDS is applicable under section 194 LBA. And under section 194 LBA, this business trust will deduct the TDS of the unit holder. But what will be the TDS rate? So in case of the non-resident foreign company unit holder, since it is taxable as per the 10% rate, so TDS has to be deducted as per 10%. In case of the resident, it is taxable as per normal tax rate, then also TDS will be deducted at the rate 10%. So guys, if dividend is paid to the unit holder and it is taxable in hands of unit holder, then TDS is deducted. In case of non-resident foreign company, also 10% is TDS rate, and in case of the resident, also 10% is TDS rate. But remember, whenever anything is paid to the non-resident foreign company, then that TDS rate should be enhanced by the health and education cess. So in simple word, whenever like that dividend is paid to the non-resident and it is taxable, then TDS will be deducted as per 10.4%. But if dividend is paid to the resident, then TDS will be deducted at the rate 10%. You got my point or not? Yes. So what we have discussed only one income, that is the dividend. So again, I am repeating, a unit holder will invest in the business trust will invest in the SPV. If SPV pay the dividend, this dividend is totally exempt in hands of the business trust. But this dividend will be taxable in hands of the unit holder if SPV pay tax as per section 115 BA. But if SPV pay tax as per the normal tax rate, then that dividend is exempt in hands of business trust, as well as it is exempt in hands of the unit holder. Now guys, next is, suppose SPV pay the interest to the business trust. If SPV is paying interest to the business trust, then that interest is also exempt under section 1023 FC in hands of the business trust. But guys, this interest is going to be taxable in hands of the unit holder. This interest is going to be taxable in hands of the unit holder. And guys, this status of the business trust is known as the pass-through status. Pass-through status means income is not taxable in hands of the business trust. Ultimately, it is taxable in hands of the unit holder. So this interest is going to be taxable in hands of the unit holder. But question is that what is the tax rate in hands of the unit holder? So guys, if non-resident foreign company unit holder, then that interest is taxable at the rate 5%. But there is a resident unit holder, then interest is taxable as per the normal tax rate of resident. Now, since interest is taxable in hands of the unit holder, so TDS is also applicable. Answer is yes. Business trust will deduct the TDS under section 194 LBA. But what is the TDS rate? So here TDS rate is, if non-resident or foreign company is a unit holder, then TDS rate is 5%. But there is a resident unit holder, then TDS rate is 10%. Now guys, next whatever I am going to explain you for the next 2 minutes, that is applicable only for the REIT. Now REIT means real estate investment trust. Example is Embassy Office Park or Mindspace Office Park, Business Park and all. That is called your REIT. Now you know that this REIT, real estate investment trust, they always have some shopping complex or some commercial building. If you see in the Hyderabad, Bangalore, Mumbai and all, there are like, you know, that commercial buildings. So there are various commercial buildings that is owned by the REIT. So real estate investment trust, they are holding some immovable property and they have given on the rental basis. So guys, if REIT is received the rental income on the real estate asset which is owned by a REIT, then that rental income is basically exempt in hands of REIT under section 1023 FCA. And when it is exempt in hands of the REIT or business trust, I can say that, then it is going to be taxable in hands of the unit holder. But sir, what will be the tax rate in hands of the unit holder? So it will be taxable in hands of unit holder as per the normal tax rate. Even if non-resident or foreign company unit holder, then also it is the normal tax rate, and in case of the resident unit holder, then also it is the normal tax rate. Then say TDS is applicable or not? Answer is yes. Here REIT is required to deduct the TDS, but what is the TDS rate? If it is paid to the non-resident foreign company unit holder, since it is taxable as per the normal tax rate, then TDS is also applicable as per normal tax rate, or I can say that rate in force. So whatever the tax rate for non-resident foreign company, at that rate only TDS is applicable, but this rental income is paid to the resident unit holder, then TDS is applicable at the rate 10%. So guys, as of now, we have discussed the three income of the business trust. Which three income? First is the dividend from SPV, second is the interest from SPV, and third is the REIT is received the rental income on the real estate asset owned by the REIT. Guys, all these three income are exempt in hands of the business trust. All these three income are totally exempt in hands of the business trust, and you are saying, sir, it is exempt in hands of the business trust. Yes, all three incomes are exempt in hands of the business trust. Like rental income is exempt in hands of business trust under section 1023 FCA, and interest dividend from SPV is exempt under section 1023 FC. So when this income are exempt in hands of the business trust, then this income are going to be taxable at the unit holder level, or it will be taxable in hands of the unit holder, I can say that. Now guys, dividend income is taxable in hands of the unit holder which was received from SPV only when SPV pay the tax as per section 115BAA. Otherwise that dividend income is totally exempt in hands of unit holder also. Now interest is taxable in hands of the unit holder which was received from SPV. Guys, non-resident foreign company 5%, other resident unit holder then normal tax rate, and rental income is taxable as per the normal tax rate. Now guys, when this three income are taxable in hands of unit holder, then business trust is required to deduct the TDS. Now TDS is applicable under section 194 LBA. Now what will be the TDS rate? If non-resident foreign company is a unit holder, if interest is paid which was received from SPV, then TDS is applicable at the rate 5% because tax rate is 5%. Dividend and SPV pay tax as per section 115BAA, it is taxable as per 10%, then TDS also 10%. And last is your rental income received by REIT on the real estate own asset. Then guys, it is taxable as per the normal tax rate in hands of non-resident foreign company. Then TDS is also applicable as per rate in force. Now guys, in case of the resident unit holder, if resident unit holder received any income, any income means here that dividend or rental income or like this interest from SPV, everything is taxable as per normal tax rate, but TDS is applicable at the rate 10%. You got my point or not? Yes. Now next part is, sir, what about the other income of the business trust? So lawmaker says that if business trust is received any other income is other than this interest and dividend from SPV or rental income on the real estate owner set, other than this income, then what will happen? So lawmaker says that if business trust is received other income like LTCG under section 112, if there is a long-term capital gain under section 112, then it will be taxable in hands of business trust only at the rate 20%, or if asset is transferred on or after 23rd July 2024, then there is a 12.5%. If there is a short-term capital gain under section 111A, then it is taxable in hands of business trust at the rate 15% or 20%. If asset is transferred on or after 23rd July 2024, then tax rate is a 20%, otherwise it is a 15%. Any other income of the business trust is guys going to be taxable at the rate MMR. MMR means maximum marginal rate. Now what is the MMR? MMR means highest tax rate of the individual plus highest surcharge plus highest health and education cess. So normally MMR will be the 42.744%. Because 30% is highest tax rate, plus 37% is a surcharge, and plus 4% is a health and education cess. So it is 42.744%. But guys, remember here business trust is opting new taxation regime under section 115 BAC. Then guys, that marginal like MMR will be the 39%. So in simple word, can I say that all other income of the business trust are taxable in hands of business trust only? If there is a long-term capital gain under section 112, then it is taxable as per 20% or 12.5%. Short-term capital gain 111A 15% or 20%. And guys, all other income are taxable at the rate MMR. But there may be one doubt in your mind, sir, what about the LTCG 112A? Because you are mentioning 112. What about the LTCG 112A? Guys, you know that I have mentioned in your like fast track batch as well as regular batch that there is some mistake in the law. And in the law, they have not mentioned about the 112A here because they mention only LTCG 112 and STCG 111A is taxable as per special rate. All other income is taxable as per MMR. So what about the LTCG 112A? So guys, normally if you take the liberal interpretation, then LTCG 112A should be taxable as per 10% or 12.5% in excess of 1,25,000. But guys, if nothing is given in the law, then you may take the alternate view and you can say that it is taxable as per the MMR. Guys, if you remember our class, then in the regular batch as well as fast track batch, I have mentioned that there is a mistake in the law. And last year, from last 2 years, I always mail to the ICI as well as the income tax department, sir, there is a mistake in the law. And you know that Nirmala Sitharaman ji heard this mistake. And when Nirmala Sitharaman ji presented the Finance Bill 2025, then in the Finance Bill 2025, Nirmala Sitharaman ji made the amendment, and Nirmala Sitharaman ji says that if business trust is having the income under section 112A, then it will be taxable as per the 10% or 12.5% in excess of 1,25,000. That amendment is made by the Finance Act 2025. Even it is not applicable for your examination, but you should take care about that. In the examination also, if business trust is having LTCG 112A, then it should be taxable as per the 112A tax rate only, because in future they already made the amendment. Now question is that, sir, all this other income are taxable in hands of the business trust, then what will be the taxability in hands of the unit holder? So guys, in hands of the unit holder, this all income are exempted, because here business trust is paying the tax now. So in hands of unit holder, it is totally exempted. Now one more point, guys, always remember, whatever business trust receive the income now, and whatever income is distributed to unit holder, in hands of the unit holder, that nature and proportion will remain same. Now nature and proportion will remain same means, for an example, if business trust is having the total income of the 100 crore. Now guys, out of 100 crore, suppose 20 crore is the interest from the SPV and 80 crore is the other income. So there is a interest and other income ratio is a 20:80. Now out of 100 crore, suppose business trust has distributed 50 crore to the unit holder. Now 50 crore is distributed to unit holder, then I can say that here 10 crore will be treated as interest and 40 crore will be treated as other income. Or I can say that 10 crore is a taxable in hands of unit holder and 40 crore will be the exempt in hands of the unit holder, because other income is exempted. Now suppose I am the one of the unit holder and I received only 10,000 income. So can I say that in my hand 20% will be treated as interest from SPV, that is 2,000, and 80% means 8,000 will be treated as other income, and other income is exempt in hands of unit holder, because all other income are taxable in hands of the business trust. You got my point or not? You understood my point or not? Yes sir, we have understood your point. Okay, one more point guys, business trust is always mandatorily required to file the return. Means they have to file the return. There is no option like any income more than basic exemption and no. Business trust is mandatorily required to file the return. Now guys, one more point, when you are the unit holder and when you transfer the unit of business trust, then what will happen? So guys, if you transfer the unit of the business trust now, then first you have to check that is that business trust unit is listed or unlisted. Suppose this business trust unit is listed in the recognized stock exchange, and at the time of the sale, if you paid the STT, at the time of sale you paid the STT, then guys 112A section and 111A is applicable. Now remember, in case of business trust unit, that earlier period of holding we required to check is 36 months. Means 3 year was period of holding. It was held for more than 3 years. Then there was a long-term capital gain, otherwise short-term capital gain. But guys, this year Nirmala Sitharaman ji made the amendment with effect from 23rd July 2024. And now Nirmala Sitharaman ji says that in case of the business trust listed unit, now you have to check that 12 month is a period of holding for long-term and short-term. So if transfer took place before 23rd July 2024, then you have to check the 36 month or 3 year as a period of holding. But if transfer took place on or after 23rd July 2024, then you have to check the 12 month as a period of holding. Now guys, if there is a long-term capital gain in case of the listed business trust unit and at the time of sale there STT is paid, then long-term capital gain will be taxable at the rate 10% or 12.5% in excess of the 1,25,000. If transfer took place before 23rd July 2024, then tax rate is a 10%. If transfer took place on or after 23rd July 2024, then tax rate is a 12.5%. Now suppose if there is a short-term capital gain, then that short-term capital gain is taxable under section 111A at the rate 15% or 20%. If transfer took place before 23rd July 2024, then 15%, otherwise 20%. But suppose if you transfer the unlisted unit of the business trust, then what will happen? So if unlisted unit of business trust is transferred, then guys section 112A will apply. And 112A says that long-term capital gain will be taxable as per 20% or 12.5%. 20% means if transfer took place before 23rd July 2024, then 20%, and if transfer took place on or after 23rd July 2024, then 12.5%. But if there is a short-term capital gain, then short-term capital gain is taxable as per the normal slab rate. Short-term capital gain is going to be taxable as per the normal slab rate. Okay, now guys, one more point all people try to understand. Guys, there is a one concept is called sponsor. Sponsor means, I can take an example. Guys, I have mentioned that this business trust should hold some controlling interest in the SPV, and as per the current SEBI guidelines, if we see presently 50% or more of the voting power or like controlling interest in the SPV should be held by the business trust. Now guys, suppose for an example there is a one company and we all are the shareholder of the company. We all are the 100% shareholder of the company. Now guys, we want to make the business trust and that company will become the SPV. But company will become the SPV. How company will become the SPV? 100% share are held by us. Now if company, you want to make the company as the SPV, then 50% or more share of the company should be held by the business trust. So now what we will do, we are the 100% shareholder of the company. What we will do, we will give shares of SPV to the business trust, and in exchange business trust will give us the unit of the business trust. Means we will give the share of SPV to the business trust and business trust will give us in return that shares of the business trust will give the unit of the business trust. So SPV share we will exchange with the business trust and business trust will allot the unit of business trust in exchange of the shares of SPV. So guys, this transfer will not be treated as transfer and capital gain is not applicable as per section 47 of the capital gain. But sir, in future, whenever we will transfer the unit of the business trust, then capital gain is applicable or not? Answer is yes, capital gain is applicable. But what will be the cost of acquisition of business trust unit? Here a lawmaker says that cost of acquisition of business trust unit will be considered as whatever the cost of acquisition of share of SPV, that will be treated as cost of acquisition of unit of business trust, and period of holding will be considered from the date when you acquire the shares of the SPV. And if indexation is applicable, nowadays indexation is not applicable, but if indexation is applicable, then indexation will also be considered from the date when you have acquired the share of the SPV. You got my point or not? Yes. Now guys, there is a one more last point here. Guys, you know that normally business trust give income to the unit holder. Normally they give dividend or normally they give the interest which was received from SPV or rental income or any income on which business trust has paid the taxes. That income they distribute to the unit holder. But guys, what happened? There was some defect in the law or defect in the system. What happened? Sometime what happened, here business trust give some repayment of debt to the unit holder, and that repayment of debt is not taxable in hands of unit holder, because in hands of unit holder, dividend from SPV that is taxable, interest from SPV that is taxable, and REIT rental income on real estate own asset that is taxable. If there is a repayment of the debt, and if there is a repayment of debt on that and on that business trust has not paid the taxes, and as well as unit holder also not required to pay the tax. So what happened? Lawmakers has inserted one new section, that is 56.212. Now section 56.212, this particular section says that whenever business trust is distributing something to the unit holder, and suppose that is not an interest, dividend and rental income, and on that business trust has not paid the taxes, so that will be taxable in hands of the unit holder. But how it will be taxable? You know that how it will be taxable. So here whatever amount received by unit holder minus whatever the issue price, whatever the issue price, or I can say that whatever the you have to reduce, the second B is the amount at which the unit was issued by the business trust. So issue price will be reduced, and remaining, if there is any amount, that will be taxable in hands of the unit holder. Don't worry, I will take one example, and with the help of that example we will understand this concept. So here example is, suppose for an example there is a one business trust, name is a XYZ business trust, issued the 10,000 unit to Mr. Raj at the rate 60 per unit. So at the rate 60 per unit, that unit were issued by the business trust to the Raj in the financial year 2021. Now business trust distributed as repayment of debt to Mr. Raj. Now repayment of debt is paid to Mr. Raj. It is like a buyback. Here their unit is not buyback, but they are paying something towards the principal. In simple word, you can say that. Now guys, what happened, you know that in the previous year 21-22 they have distributed the 25 rupees to the Raj. So here 25 rupees is distributed, but here issue price of the unit was 60. So can I say that this is the negative? So here it is nil, so nothing is taxable in hands of the Raj. Now in the second year 25 rupees again distributed. So 25 rupees again distributed. So aggregate distributed is 50 rupees and 60 rupees is the issue price. So here also negative amount, so nil, nothing is taxable in hands of the Raj. Now again 30 rupees is distributed. So can I say that here total is a 80 rupees? So total 80 is distributed to Raj, and here issue price of the business trust unit was the 60 rupees. So can I say that there is a 20 rupees? So this 20 rupees is going to be taxable in hands of Raj under section 56(2)(12). Under section 56(2)(12). And guys, again 30 rupees is distributed. So can I say that there is total is 115 minus issue price is 60 and minus what amount is already taxable under section 56(2)(12). So can I say that 56(2)(12), 20 rupees already got taxable earlier. So now remaining is a 35 rupees. So this 35 rupees is going to be taxable under section 56(2)(12) in hands of the unit holder. You got my point or not? Yes. So this is the completion of your topic business trust. Now guys, we are going to start with the revision of the investment fund. So guys, in India, as per the SEBI guidelines, there are three types of the investment fund. If you remember, there is one is the alternate investment fund, AIF category 1, category 2 and category 3. Now guys, here we are going to discuss the category 1 and category 2 only. Category 3 is basically discussed in the non-resident taxation. If you remember the non-resident taxation topic, in the non-resident taxation topic, you know that there is a one section 115 AD, and with 115 AD there is a FII and specified fund. So FII and specified fund, that specified fund is a basically alternate investment fund category 3. Now guys, we are going to discuss the category 1 and category 2, that is alternate investment fund, or I can say that the investment fund. Now what are the investment fund basically? So if any, like there are various people in India, rich people, they are having huge money. So they are not able to manage the money. They are not able to invest the money, where to invest the money. And also they always take the help of the AIF, or I can say that investment fund. Now this people, rich people, they will give the money to the investment fund, and investment fund will invest in the share market, or they will invest in the startup and all. If you heard about the venture capital fund, or SME fund, or social venture fund, or infrastructure fund, or angel fund, or private equity fund, or fund of fund, debt fund, fund of fund and all, that is known as the investment fund. So now guys, we are going to discuss why I'm saying that there is a rich people, because you know that in India, if you wish to invest in the alternate investment fund, then guys, there is a minimum capital contribution commitment should be the 1 crore. Means less than 1 crore. Suppose I am having the 5 lakh rupees and I want to invest in the investment fund, I cannot invest in the investment fund. So for investing in the investment fund, there is a minimum cap, or you can say that minimum commitment of rupees 1 crore. Now guys, let's start with the discussion of the investment fund. So guys, here if you will invest in the investment fund, then you will be treated as the unit holder, or I can say that investor. So unit holder will invest in the investment fund, and investment fund will give the income to the unit holder. Whatever income is earned by investment fund will give the income to the unit holder. Now first point is, remember, in hands of the investment fund, all the incomes are exempt. All incomes are exempt except the PGBP. So in simple word, PGBP income is taxable in hands of the investment fund. Other all income are exempt in hands of investment fund. But what about in hands of the unit holder? So guys, when all the income are exempt in hands of the investment fund, so can I say that all income will be taxable in hands of the unit holder except the PGBP? Now, why except the PGBP? Because here PGBP income is taxable in hands of investment fund. So this PGBP income will be exempt in hands of the unit holder, and all other income are exempt in hands of unit holder. So those income are going to be taxable in hands of the unit holder. Now guys, try to understand. Lawmaker says that here in hands of the unit holder, that nature and proportion of income will remain same. Means whatever nature and proportion in hands of the investment fund, that same nature and proportion will be in hands of the unit holder. It will be like that unit holder only directly invested in some asset. Suppose for an example, suppose there is 100 crore of the income to the investment fund, and guys, suppose 50 crore is of PGBP income and 50 crore is other income, then in hands of unit holder also that nature and proportion will remain same. Now one more point here. Guys, suppose investment fund has earned the income of the 100 crore, but out of that only 80 crore is distributed to unit holder. Then also guys, this topic says that total 100 crore will be taxable in hands of the unit holder except PGBP obviously. Means here income is earned by the investment fund is 100 crore. Out of that only 80 crore is distributed to unit holder. Then also total 100 crore will be taxable in hands of the unit holder, because on the last day of the year it is assumed that every income earned by the investment fund is distributed to unit holder. Now suppose sir, you are saying that investment fund is having the 100 crore income and out of that 80 crore is distributed, then also it is 100 crore is taxable in hands of unit holder. Then sir, what about that remaining 20 crore is distributed in future? So suppose in the next year that investment fund distributed that remaining 20 crore rupees to the unit holder. So is that again this 20 crore will be taxable in hands of unit holder? Answer is no, because on the due basis total 100 crore is already taxable in hands of the unit holder. Then guys, that remaining 20 crore at the time of distribution is not going to again taxable in hands of the unit holder. You got my point or not? Yes. Now one more point. All people pay attention. Sir, when income is taxable in hands of the unit holder, when investment fund give the income to the unit holder, then in hands of unit holder it is taxable, then TDS will apply. Answer is yes. Here TDS is applicable, and guys, how TDS will apply, you know that. Suppose investment fund pay the income to the unit holder and this unit holder is a non-resident or foreign company, then TDS is applicable as per rate in force. Means whatever rate applicable for unit holder, na, at that rate only TDS is applicable. But suppose unit holder is a resident, na, then TDS is applicable as per 10% under section 194 LBB. So here TDS is applicable under section 194 LBB. In case of non-resident foreign company unit holder, rate in force, and in case of the resident unit holder, there is a 10% is a TDS rate. Now question is that, yes sir, what is the tax rate for the investment fund? But you will say that, yes sir, why there is need of tax rate of the investment fund? In hands of in hands of investment fund all income is exempt now. But guys, PGBP income is taxable now. So when PGBP income is taxable in hands of the investment fund, then sir, what is the tax rate of investment fund? So tax rate of investment fund depends on the constitution of investment fund. If investment fund is constituted as a partnership firm or LLP or a company, then your tax rate will be the 25% or 30%. Basically, in case of the company, tax rate is 25 or 30%. In case of partnership firm, LLP, it is 30%. But suppose this investment fund is constituted in any other form like AOP, BOI or trust and all, then guys, tax rate of the investment fund will be the MMR. MMR means maximum marginal rate. Now guys, one more point. Remember, in case of the investment fund, that investment fund is mandatorily required to file the return, means they have to file the return. Now guys, there is a one more point. Sir, what about the losses? Because you have mentioned that income, in case of the investment fund, that PGBP income is taxable here, all other income are taxable in hands of unit holder. So what about the losses? So guys, here if there is a losses, then investment fund first will do the setup. Means losses setup will be done by the investment fund, like capital gain and PGBP can be set up. Or suppose if there is other sources, loss and capital gain, it can be set up. So setup will be done by the investment fund level only. And after setup, if there is any loss remaining, and guys, if that loss is the PGBP loss, then it will be carried forward by the investment fund only. If the loss is a PGBP loss, remaining loss is a PGBP loss, it will be carry forward by the investment fund only. But guys, if that loss is any other head loss, then it will be passed on to the unit holder. So loss will be distributed to the unit holder. Other than PGBP loss, any other loss remaining, then that loss will be distributed to the unit holder, and unit holder can set up and carry forward with their own income. Now here PGBP losses will not be distributed. PGBP losses will be carried forward and set up by the investment fund only, but any other loss that will be distributed to the unit holder. But there is a one condition, that unit holder should hold the unit for the 12-month period. If unit holder is not holding the unit for the 12-month period, if unit holder is not holding the unit for the 12-month period, then that losses will not be passed on to the unit holder, and that loss will not be able to carry forward by the investment fund also. In simple word, that loss is going to be expire, or you can say that lapse. So suppose if there is a loss, PGBP loss will be set up and carry forward by the investment fund only. Any other loss will be distributed to the unit holder, but unit holder should hold the unit for the 12-month period. So in the 12-month period, he was holder of the unit, then he will get the losses. If he is not holding the unit of the 12-month, then that losses will be lapse, means it will not be allowed to be carry forward and set up to the investment fund as well as the unit holder. Now guys, here there is a one more point that is related to the 1/4/2019. Guys, what happened? You know that before 1/4/2019, that losses were carry forward. All other losses were also carry forward by the investment fund. But from 1st April 2019, they made the amendment and losses is distributed to unit holder. So if there was any earlier losses, then it will be distributed to the unit holder holding the unit of the investment fund as on 31st March 2019. Now there is a one more topic that is called securitization trust. Now, what is the meaning of the securitization trust? So securitization trust, if you have heard about the SARFAESI or asset reconstruction company, if you remember, that is called your securitization trust. So suppose for an example, HDFC Bank is having the 10,000 crore, and that 10,000 crore is distributed by HDFC Bank to the as a loan to the people. Now guys, that loan is given by the HDFC Bank. Basically, this is the asset for HDFC Bank. Now they don't have the money to give the loan. So what HDFC Bank will do? No, you know that HDFC Bank will sell that loan to the any other reconstruction company, or you can say that the securitization trust. So that loan will be sold by the HDFC Bank to the any company, or you can say that the securitization trust. And the securitization trust will get the income from that loan repayment and all, but securitization trust has to pay the advance payment to the HDFC Bank. That concept is called securitization. You must remember from your AFM subject as well as in the law also, you have studied the SARFAESI. When you have given that SPOM exam, so in SPOM exam there was a SARFAESI, I think in the law. So that is called securitization trust. Now guys, Edelweiss is also having the securitization trust. So guys, in the securitization trust, if you invest now, then you will be treated as the investor. So investor will invest in the securitization trust, and securitization trust will give the income to the investor. Now what is the taxability? So guys, securitization trust, all income from securitization activity are exempt under section 1023 DA. So securitization trust, all income are exempted. And guys, in hands of investor, all income are going to be taxable. Same nature and same proportion applicable in hands of the investor. Now suppose there is 100 crore of the income, and out of that only 80 crore is distributed to the investor, then only total 100 crore will be taxable in hands of the investor, like a investment fund. Now one more point, okay guys, when securitization trust is paying the income to the investor, then it is taxable in hands of the investor. So TDS is applicable. Answer is yes. Here TDS is applicable under section 194 LBC. Here TDS is applicable under section 194 LBC, but what is the TDS rate? So guys, remember here, if there is a non-resident or foreign company investor, then TDS rate is rate in force. Here, if that investor is a resident person and resident individual HUF, then TDS rate is 25%, but there is any other resident payee, then TDS rate is 30%. You got my point or not? Yes. Now guys, since all income are taxable in hands of the investor, so if there is a loss also, that will be allowed to be set up and carry forward by the investor only. Guys, this topic is similar to the investment fund, but only difference is under investment fund what happened, you know that PGBP income was taxable in hands of investment fund. fund, and other income are taxable in hands of unit holder. Here all income are exempt in hands of securitization trust. All income are going to be taxable in hands of the investor only. Now guys, for the purpose of this three topic, business trust, investment fund and securitization trust, there may be one question in your mind, sir, how this investor or unit holder will get to know that what is the nature of income, what is the proportion of income and all. So here lawmakers made one rule, and lawmaker says that this business trust, investment fund and securitization trust, they will submit one statement, or you can say that the all detail to the unit holder by 30th June of the next financial year. So our financial year is, suppose for an example, 24-25. So next financial year is 25-26. So till 30th June 2025, they have to submit all the detail to the investor about the nature, proportion and all. Now they have to submit this detail to the income tax department, also to the CIT, PCIT up to 30th November of the next financial year. But guys, in case of the investment fund, there is some different date, and in case of investment fund, that investment fund has to submit this detail to the income tax department till 15th June of the next financial year. You got my point or not? Yes. So this is the completion of your three small topic, that is business trust, investment fund and securitization trust. Guys, revise it very carefully. Just do all the question that is given in the compiler. You are going to get the 6 marks in your examination. Thanks a lot, people. That's enough for today from my side.